All right, so we just got done having one of the craziest weeks in the market in a long time. Obviously, by far the biggest piece of news was Trump winning the election. Second thing, the Fed cut interest rates 25 basis points again. I wanted to get into all that. I wanted to get into the earnings news from this past week. First things first, if you get value out of this video, please like and subscribe. I really appreciate that. So first things first, what do I think of Trump getting elected? As far as the stock market goes, politics aside, I think Trump will be better for the markets than Kamala. And I mean, the fact that the markets were up very, like the S&P was up about 4.5%, the NASDAQ almost 6%. I think that was a very clear signal that the markets believe that Trump is the better candidate. And you can also tell that as Trump started to become more likely to win, too, the markets were responding more positively to that. Now, again, is he all positive? Not necessarily. And you also have to keep in mind, too, that you don't want to read too much into some of the things he says. For example, Trump, has this, drill, baby, drill is one of the sayings that he's famous for. But you have to keep in mind that when you look at oil, a lot of the big oil stocks, they did not do that well under Trump. They did better under the Biden and Harris administration. So you got to keep in mind that you don't necessarily want to take everything they're saying and assume that it's going to work out well. The overall market, I think it's going to be better, but just because they're super friendly to oil doesn't necessarily mean that oil is going to do great. And just because they're not friendly to whatever sector you want to take doesn't mean that it's not necessarily going to do well. You have to be strategic with that. But the other reason, too, that I say that I think Trump will be better is just the fact that he's more pro-business. He's a businessman. And businessmen, I think, are obviously going to be better for the stock market when they're in politics. And on top of that, Kamala has suggested some just absolutely insane things. I don't mean to be partisan here, but anyone's talking about price controls and unrealized capital gains taxes, whether or not you think they're actually going to do them or not, I don't know if they actually were going to do them, but just simply talking about those things is absolutely and utterly insane. Anyone with anything even resembling basic economics knowledge knows that those things are absolutely and utterly insane to suggest, because not only do they not work, they make the problems worse. And number one, I'm kind of limited for time here. I don't want to make this video forever. And so if I have to explain it to you, then yeah, I don't even really know what to say. So I think that Trump definitely will be better for the markets, given how well the markets did over the last few days. I think that very clearly signals that. Next point here, interest rate cut. This is something that up until very recently, this was looking like they might not cut rates, but then we had a very weak jobs report recently, and I think that kind of solidified, yeah, we kind of have to cut. And in a lot of ways, the economy is good, but in a lot of other ways, the economy isn't that good. I think that there's going to be a little bit of a sugar high with people being more positive with Trump being elected. But at the end of the day, he still is a politician. He's not going to be some savior. I don't expect that. I hope. I'm not even American, so it doesn't even really affect me all that much. But he still is a politician. I wouldn't necessarily get your hopes up too much. Like, we have to be realistic. So that's basically what I think there. As far as rates going forward, it's still looking like there's probably going to be a cut in the December meeting, and then probably anywhere from maybe 2 or 3 cuts in 2025. It all depends on how things go. For all we know, business really starts to pick up, unemployment goes down, and they're like, hey, we don't need to cut. So anything could happen, but I still think that you kind of have to remain neutral when it comes to this kind of stuff. I wouldn't get too bullish and I wouldn't get too bearish. The next thing here is Bitcoin. I think this is something we really have to be talking about, because this is one of the other things too with Trump being elected. Bitcoin is going to do very, very well. And this is something that not a lot of people are talking about here. Look at this chart, or not a chart, just a post. Bitcoin prices on election day. 2012, $10. 2016, $709. 2020, $13,550. which was actually right after when I first started buying. I think I first bought in maybe late summer, early fall of 2020, if I remember it correctly. And then 2024, just over 70,000. Like, how is anybody not intrigued at this? Like, it just boggles my mind that all of these traditional finance people see stuff like this and aren't intrigued. Like, it just boggles my mind. Like, how can you not be intrigued by this? And people say, oh, well, I don't know how to value it. And it's like, yeah, because you're stuck in this archaic way of thinking about it, that it has to be valued in the same way that real estate is or stocks. But that's not the point of it. The main thing when it comes to Bitcoin is zero counterparty risk. Right? How much would you pay for something that has zero counterparty risk? Every other asset has counterparty risk. The governments or the banks can seize your bank account. They can seize your stock portfolio. Gold, the same thing too, because nobody has $1 million. I mean, I would expect virtually nobody has millions of dollars in gold just sitting in their basement, even if it's in a safe. You can't transact. You can't send millions of dollars in gold. I mean, you could, but it's going to cost you a fortune to send millions of dollars in gold across the country or to a different country. So inevitably, it has to stay in a centralized place. So that's the first point. Bitcoin has zero counterparty risk. Number two, it's the only asset in the world that's truly scarce. So, and the list could go on and on. I could give other examples as well. It doesn't discriminate at all. So people, like, this is the problem I kind of have with these people, is that they don't ever try to steel man Bitcoin. It's always a straw man. Oh, I don't know how to value it. And it's like, okay, well, you can do a super in-depth discounted cash flow on some stock with a $500 or a $500 million market cap, or maybe even less, but you can't figure out Bitcoin. Like, I don't trust you. I feel like these people are just lazy. And I would understand them. Like, if Bitcoin was underperforming the market, at least I could understand them on that. Like, they would have a legit excuse. But when Bitcoin is absolutely destroying the market, it's absolutely destroying gold, I don't get why people aren't intrigued. All the gold bugs, like one of the podcasts I listen to, they're talking about, oh, people are sleeping on gold. Gold's still like undervalued and people are sleeping on gold. And it's like, gold is up 38% in the last year. Bitcoin is up 116. Gold is up less than the NASDAQ is up, and the exact same as the S&P over the last year. How is that impressive? I mean, yeah, it's impressive, but compared to 116%? Like, come on. Like, I just do not get it. And the reason, to bring it full circle here, this is why I am so bullish, is because so many people still haven't figured it out. And I've said time and time again that I don't think the majority of people ever will figure it out, because the majority of people in society are incredibly ignorant. But I do think that we're only at like, 2-3% adoption right now. I think it's reasonable that 20 or 30% of people adopt it. I think it's reasonable that when you look at what MicroStrategy has done, it's only a matter of time until other companies start to do that. It's only a matter of time until people get tired of their pension funds grossly underperforming the market. Like, it's only a matter of time until that happens. Like, are you going to pay some in retirement fund manager 200 basis points to underperform the markets? Or would you rather have Bitcoin or even just the S&P? Like, it's just, that's another thing, don't get me started. Like, it's just absolutely insane that people are perfectly fine paying these investment fund managers 200 basis points to underperform the market for their retirement funds. And they just don't care. Like, people don't care. And like, when you look at like CPP and stuff, it's like, people don't care. They underperform the market. They charge outrageous fees, and very few people actually care. So anyway, that's the second thing I wanted to bring up. As far as the markets go this week, the S&P, like I said, was up about 4.5%. The NASDAQ was up just under 6%. The equal weight index was up just over 4%. The Mag 7 was up like 8%, I think. And then the small caps were up about 7, and the mid caps are up about 5. So it was more the growthy side of the market that definitely outperformed this week. Small caps also outperformed. It was more the value side that underperformed. But that's kind of expected when you have Trump, who's bigger on low interest rates. Those are the small cap names, and the growth names are going to do better. So I wouldn't expect that to go on forever, but that certainly could be a sign of things to come. So let's get into the earnings from this past week. The first one here, NSSC, NAPCO Security. They missed revenue and earnings, although they still were up on the week, but pretty much everything was up on the week. This is a company that I've owned before. I think it has a lot of potential. It's just kind of hard to get a good reading on it. It has really good metrics and insights, but it's kind of hard to get a good reading on it. And given it's down, I don't really understand. So I'm kind of staying away from it because of that, but it certainly does look intriguing. Palantir released good earnings and revenue. They were up quite nicely on the week. I think they were up like 10% or something like that. No, they were up even more than that. They started the week at 41. They were up 40% on the week, which is just absolutely insane, especially for a company it's now at a $127 billion market cap, but it would have been below 100 at the start of the week. So that's just crazy that they add $30 billion to their market cap in a week. That's just insane. And it's not like this is Nvidia or Apple or a company like that. That would be understandable. But a company that's still this small, even though they're a large cap name, that is just crazy. And Palantir is a company that I've wanted to get into for probably a year now. It's just, I just feel like it's too expensive. And given its run up over this past week, I don't think it's ever going to get, a price of sales of 49, a PE of 267, like that's just insane multiples, but I do think it is a really good company. NXPI, this company beat earnings, they missed revenue. This is a pretty solid company in my opinion. I have owned it in the past. I think it's a little bit expensive where it's at right now, so I'm not currently buying, but I probably would get in if it got cheap enough. Realty Income, this is one that's popular in the dividend investing crowd or group. They missed FFO. They were actually down on the week. This is one of those companies I don't see what people see in this company. It's grossly underperformed the markets over the last 5 years or so, and I don't see anything really changing with that. They're barely growing their dividend. Yeah, it's 5.5%, but they're barely growing it. Like there's companies that are clearly better than it. I don't see what people see in that. The next one is CEIX. This is another one I've owned in the past. I probably would get back into it again if the price was right. They beat earnings and revenue, so looks like they were up quite significantly on that news. Next one here, Microchip Technology. This is another one I've owned in the past. I did sell it off. I do think it's a decent company, although I just think there's better opportunities, hence why I sold it off. They did beat earnings and revenue, however, they were down on the week. So I think me selling it off definitely was the right move. QLYS, this one was up a lot on the week. I think it had to have been up over 10%. They're up to 154. They started the week at 121. They were up 26% on the week, which is again just crazy. I really like this company. I don't think it's undervalued anymore. They're up to 154. Let's see what their current valuation is. They are below their historical PE and price to free cash flow, but a PE of 33, a price to free cash flow of 25. I don't think that's cheap. So I do think that they're maybe fair value, maybe a tiny bit overvalued where they're at right now. I would look to pick it up again at maybe below like 140, 145. I do think this is a really good company though, and they did beat earnings and revenue. SMCI, this is one that's been in the news a lot recently for potential fraud allegations. I don't think they've ever actually been proven. They did miss earnings. They lowered guidance. They were down on the week. It looks like they were down a lot on that news, but they did kind of trend back up. This is a company that I don't think I ever would be comfortable buying. I mean, obviously if it was low enough at one point, but I mean, look at them over the last year or so. Like they were at $118 at one point, and they were down 79% ever since that 52-week high, and they're actually almost flat over the last year. So if you bought them near those highs, you are definitely hurting. Next one here is Owens Corning. This is a company I do like. I have a small position in. They beat earnings and revenue. They were down, or it looks like they were up a little bit on the week. Let's see. Yeah, they were up actually kind of nicely on the week here. Very good company. I definitely would buy more if the price was right. ARM Holdings, they were one of the popular, I don't know if they were a SPAC or an IPO. I don't remember off the top of my head. Somewhat recently. There's a lot of hype around them. They did beat earnings and revenue. However, they did lower guidance a little bit, so that's a little bit concerning. But another company I don't think I would buy, just because I don't think it's kind of hard to value, to be honest. IIPR, they did miss earnings. They released kind of somewhat shaky guidance, and I think that the one thing when it comes to a Trump administration is they're probably not going to be as friendly to the marijuana industry, which is what they're in. I still think this is a good company. My price point on this is like $70, so I'm still up quite nicely. My yield on cost is well over 10%, so I'm not buying. This is one I simply will hold. I probably never will sell, depending. I might sell off small pieces every now and then. So if you bought recently, then yeah, you're definitely not looking the greatest, but that's kind of the way things go. Mealy, this is one I'm buying now. It did drop on earnings. They did beat earnings, they beat revenue. They missed earnings. They were down quite significantly on the week. I really do like this company. I think it has a lot of potential, but given it is based in South and Central America, that definitely does come with some risk. So you definitely got to know what you're getting yourself into, but I do think it has a lot of potential, so that's why I am buying it. Primerica, I really do like this company. I have a small position in it. They beat earnings and revenue. I just think they're too expensive where they're at right now. I wish I could have bought more in like the low 200s when I first started to get in, but what can you do? But I definitely would buy more if it got cheap enough. IBP, Installed Building Products. This is another one I have a small position in. They missed earnings. They beat revenue. They were actually down a little bit on the week. I would buy them if the price was right, but I still think they're a little bit expensive where they're at. Affirm, this is one I kind of like to watch just because I think that they're kind of an interesting company. Beat earnings and revenue. They were actually up a little bit on the week, but it looks like they kind of had kind of a crazy week. They are still not even making money, so I definitely would not be buying them, at least where they're at right now. Arista Networks. This is another company I've had on a watch list for quite a while that I've never bought because it's way too expensive, but I do think it's a really good company. They did beat earnings and revenue. They did lower guidance a little bit, so I think that kind of dampened expectations with them a little bit. They were basically flat on the week. Civitas, this is an oil and gas name. I have bought a little bit in the past. Beat earnings and revenue. I think they're one of the better oil and gas names. They were up quite nicely on the week. EOG, this is one of my top 2 or 3 oil and gas names. Beat earnings, missed revenue. They were up quite nicely on the week. And then the last one here is Monster Beverage. Another one that I've thought about buying on its recent pullback. I feel like the competition in this industry is just too fierce. Like, it's so easy to come out with your own energy drink, but I mean, this is a company that I think they're one of the top, literally 2 or 3 companies going back 25 years, like as far as returns go. I think they're up like over 10,000%. So they've performed extremely well, but past performance doesn't necessarily guarantee future performance. I still do think they'll do okay because I think it's a growing industry, it's a growing market. However, I feel like competition is just too fierce, and it's just too hard for them to develop a moat. They do have a little bit of a moat where they're at right now, but competition is very fierce, so that's why I'm a little bit concerned for them going forward. So that is the markets and the news from this past week. Like I mentioned at the start there, please like, comment, subscribe. Really appreciate all that, and stay tuned for more.